Welcome back, fellow investors, to another episode of Stock Sleuth, where we dive into the stocks that the financial elite are buying. I'm the Stock Sleuth, an investigative finance journalist, and I make videos analyzing the stocks that the apex predators of Wall Street, the rich and the powerful insider billionaires, hedge fund managers, CEOs, and politicians buy to give you a constant flow of investment ideas without spending hours upon hours combing through screeners, news articles, and financial statements. Today, I'm investigating the investing strategy and top 10 holdings of a famous investment manager who is often referred to as UK's Warren Buffett. Let's begin. Born on May 29, 1953, in London, UK, Terry Smith's upbringing in a working-class family instilled in him a strong work ethic and an early interest in finance. He pursued higher education at the University of Southampton, majoring in history. This academic background later shaped his distinctive perspective on the financial world. Influenced by both his upbringing and academic pursuits, Smith's approach to investments was marked by practicality, diligence, and an astute understanding of economic dynamics. This foundation laid the groundwork for his remarkable career as an investment manager, often hailed as the UK's Warren Buffett. Terry Smith's investment approach bears striking resemblances to the legendary Warren Buffett. Both are steadfast proponents of value investing, prioritizing long-term value over short-term gains. Their exceptional long-term track records, consistently outperforming the market, have earned them the trust of investors worldwide. Both emphasize fundamental analysis, scrutinizing financials, competitive positioning, and growth potential. Their commitment to a buy-and-hold strategy sets them apart from traders, focusing on the enduring strengths of the companies they invest in. Their shared dedication to quality, simplicity, and transparent communication underscores their investment philosophies. These similarities highlight the timeless principles that drive their enduring success. Terry Smith embarked on his illustrious career in finance, initially delving into the realm of stockbroking. He gained invaluable experience at renowned firms including W. Greenwell & Co. and Barclays de Zoete Webb, now integrated into Barclays Capital. This early professional phase honed his profound understanding of financial markets and investment strategies. In 1986, Smith played a pivotal role in establishing Tullett & Tokyo Forex International, later known as Tullett Prebon. This globally recognized interdealer broker swiftly emerged as a major player in the financial industry, offering brokerage services for an array of financial products spanning bonds, foreign exchange, and derivatives. Smith's career reached new heights when in 2000, he assumed the mantle of CEO at Collins Stewart, a prominent UK investment bank and stockbroker. Under his discerning leadership, the company underwent substantial expansion, cementing Smith's reputation as a visionary and adept financial executive. Later in 2010, Smith went on to found Fundsmith, an asset management firm based in London, further solidifying his standing as a luminary in the financial world. Fundsmith, under Terry Smith's stewardship, espouses a resolute commitment to long-term, high-quality equity investments. They prioritize lasting value over quick gains. This philosophy is the cornerstone of their approach. Additionally, Fundsmith places great importance on transparency and simplicity in their operations. This commitment to clear decision-making and straightforward practices is woven into the fabric of the organization, influencing their investment decisions and interactions with stakeholders. These core principles have not only set Fundsmith apart as a leader in the investment arena, but have also consistently rewarded their investors with significant returns. As Terry Smith once said, our investment philosophy is straightforward. We are long-term investors in high-quality businesses. According to this, Fundsmith's portfolio comprises of strategic selection of high-impact holdings, embodying Terry Smith's unwavering focus on lasting value. Among these, industry giants like Microsoft and Meta Platforms stand tall in the technology sector, while healthcare stalwart Novo Nordisk reinforces the fund's diversified approach. Visa, a leader in global payments, and cosmetics powerhouse L'Oreal further contribute to the fund's dynamic composition. Additionally, companies like IDEX Laboratories and Stryker Corporation, both prominent in the healthcare and medical technology sphere, underscore the fund's commitment to sectors with enduring demand. The inclusion of Philip Morris International reflects an astute understanding of consumer preferences, while automatic data processing strengthens Fundsmith's presence in the human capital management domain. Finally, Colgate-Palmolive, an established player in consumer goods, completes the roster of top holdings, showcasing Smith's meticulous approach to constructing a resilient and diversified portfolio. These selections mirror Smith's belief in long-term, high-quality investments, just as his quote states, "When I buy a share, I'm thinking about holding it forever." And this portfolio is also a stunning example of his quote, "Diversification is a protection against ignorance. It makes very little sense for those who know what they're doing." Definitely after witnessing this vast range of holdings, you may wonder what the magic is behind these successful investments. As Terry said, "I don't know when to get in or out of the market, and neither does anyone else. But Terry Smith's 6 golden investing ratios are foundational to his investment strategy, reflecting his emphasis on fundamental analysis and long-term value." The gross margin, exemplified by Apple's consistent high gross margin, reveals a company's efficiency in managing production costs. It measures how efficient the company is at managing the material and labor costs during the production process. Operating margin delves deeper, indicating how much profit a company retains per dollar of revenue, showcasing operational efficiency and competitive advantage within the industry. The higher the margin, the more profitable a company is for every dollar it makes in revenue. Return on capital employed measures a company's ability to generate profits from the capital it deploys, encompassing both debt and equity. As Smith said, the magic of a high return on capital is the greatest source of value in the economy. This ratio aligns with Smith's emphasis on high returns and efficient capital utilization. The cash generation and conversion ratio reflects Smith's focus on turning profits into cash effectively. It monitors the relationship between operating cash flow and operating profit. Smith recommends investing only in companies where operating cash flow is at least 95% of operating profit. Smith's aversion to excessive debt is echoed in his emphasis on the debt-to-equity ratio, where low debt relative to equity signifies financial stability and flexibility. Too much debt relative to equity funding can signal trouble and a lack of flexibility when it comes to raising further funds. Lastly, interest cover measures a company's ability to cover its existing debt interest payments. This ratio is crucial in assessing financial risk, ensuring the company can ride out rough patches. Smith advises against companies with an interest coverage ratio below 10, emphasizing the importance of financial stability. These 6 ratios, as Terry Smith believes, not only offer crucial and critical insights into a company's financial health, but also provide a roadmap to sustainable and successful long-term investments. Totally, Terry Smith's influence on the financial industry is profound and far-reaching. His investment philosophy, emphasizing long-term value and high-quality businesses, has reshaped how investors approach the market. As he aptly states, the biggest mistake an individual investor can make is to not understand what they're investing in. Smith's emphasis on transparency and simplicity in investing principles has empowered countless individuals to make informed decisions. Beyond investment, his dedication to philanthropy and education underscores his commitment to giving back. Smith's quote, "It's our job to sit and wait for the things we like to be at the price we like. That's the hardest job in fund management," encapsulates his patient and disciplined approach, which has yielded remarkable results and success and left an enduring mark in the financial industry. If you're inspired by him and considering investments, remember this quote from Terry Smith: "The first thing you need to know about making money in equities is that it's simple, but it's not easy." Thank you for joining us, and stay tuned for more updates on stock analysis.